Hello, everyone, and happy Friday. It's that time of the week. It's time for the Security Token Show, all your latest and greatest RWA tokenization news. We're your hosts. I'm Herwig, Konings, and of course, I'm joined by Kyle Sonlin. As always, how are you, my friend?
Herwig, I am great. It is Friday. We are wrapping up the year here. December 13th it is today. That means there's only one or two episodes left after this one for our Company of the Year nominations. And we're wrapping it up, but that doesn't mean that the news is slow. It was another hot week off the press.
No, it continues to be the case where we just can't cover everything, Kyle, but we got some hot stuff to discuss. So what a great episode. Another interview, of course, also lined up. Can't wait to get into it. So why don't we start there? But before we do, please scroll down or go move that mouse down to that subscribe button, that like button, maybe even that share button if you got someone in mind that you think would also love this show. The RWA boom is upon us, and we are here to be your source every week, coming at you, starting with the market movements. Kyle, another crazy week of activity in the crypto markets and another crazy week of activity in the RWA markets. Man, what a week. Starting off, I think we got to cover this huge new hire by Securitize. Michael Sonnenschein, as they say, all sun and shine. He's a great guy, mostly because people know him from his incredible success and tenure, I think 10 years at Grayscale. So bringing it up to the behemoth that it has become today. Been watching them from the side, a personal fan, Kyle, I got to say, just watching, of course, the success of Grayscale, an innovator and leader, obviously, in the crypto markets. But now he, as we like to say, is coming to the dark side, right? He's coming over to the RWA side. Securitize clearly beefing up a strong executive team. So COO, basically the right-hand guy to Carlos, making this an amazing duo, I think. And you can glean into it all you want about, his experience putting together trust products and, converting to ETS or ETPs and the like. But all I can say is I just know that this is an incredible quality of talent that's coming to Securitize at a pivotal time, as 2025, is going to be the year that really all of this plays out for the industry, right, Kyle? So would love to hear your thoughts on this one.
Yeah, I think this is a great hire for them. Carlos Domingo, the CEO of Securitize, has done a really, really great job of building the brand and bringing on strategic partners. And the key for a company like this as it reaches scale is to bring on operators, right? People that he can delegate to that are going to help actually drive products to market. And it does seem like Sonnenschein is a great fit for that. Grayscale has been in lawsuit after lawsuit with not only their partners, but also with government regulators in getting the Grayscale, Bitcoin trust to convert into that ETF product. That's a $20 billion product at this point. And so this guy certainly has experience running multi-billion-dollar funds and driving public markets products. Of course, that's the main focus here for Securitize, as they have BlackRock as a main partner. They have other firms like KKR that are looking and trying to figure it out, and bringing a guy like Sonnenschein in to help kind of point guard a lot of those fund products and bring those things to market in a sustainable and scalable way makes a ton of sense. This is a huge hire. And, I don't want to say I'm surprised because Securitize has done such a great job over the years, but it's an impressive hiring, I think, for sure.
It's a great hire for Securitize, but also to what degree, Kyle, might this be a little bit Michael saying, hey, I got to compete against BlackRock right now with Grayscale? Well, you can't beat them, join them, right?
That's right. There's also, he's faced some criticism with not him directly, but Grayscale has, in the fact that their Bitcoin ETF has the highest fees in the market by a significant margin. And they've really had a difficult time really defending why that is. I think that it's obviously because they can, right? So why would you turn that down? They also have some massive liabilities they're still trying to pay off from the previous cycle, which I'm sure plays an impact here in kind of settling a lot of the Genesis debt and a lot of the things from parent company DCG. So perhaps this is an opportunity for him to move into a more burgeoning sector while the market was hot. We do know that the Grayscale ETF has been decreasing in AUM as BlackRock has been increasing. So I think to your point, there may be something real in what you're describing.
Good time to maybe get out of one and join another. But Kyle, we also saw some fundraising activity in the market too, right?
That's right. I wanted to talk a little bit about Exhibits. This is a company that's actually tokenizing GPU clusters. So a GPU cluster is really just a fancy way to describe a server rack. So when you have these big data centers that are running all the AI stuff, cloud computing, all this stuff is large companies like Google or Apple, or even smaller, businesses that essentially lease out processing power from these big greenhouses that are filled with NVIDIA GPU chips, right? So you fill it with graphics card processors, you plug them all together, put a bunch of fans and air conditioning in there, and you essentially have either a mining operation. We see a lot of Bitcoin miners are similar, but these are, instead of mining for Bitcoin, these are essentially just processing AI and deep math transactions. And Exhibits is doing an interesting process where they own these facilities, and then they're tokenizing the actual performance of these units, and so that you can buy and redeem on a marketplace. I think this is something we've seen before, but the exciting thing about Exhibits is that they've raised $15 million led by Hack VC. And so they have been successful in driving this product to market, getting buy-in from large investors to bring their operating capital up. And it looks like they're bringing this to market. So theoretically, they're going to be tokenizing. It's actually really interesting, Herwig, and I want to get your thoughts on this. Is this a real world asset? If it's you're tokenizing hashing power, but the hashing power itself is kind of figurative, and it's like you know what I'm saying, but theoretically it is a commodity, I guess, in some regard. I think at least it comes down to energy has to power it, right, at the end of the day. So there is that real world component, I guess. No, it's fascinating. It's a fascinating question, but definitely structured, presumably, as an investment opportunity that they plan to do tokenizing GPU clusters. So without a doubt, 10 million ARR, by the way, 300% growth per quarter in revenue. So this company is absolutely smoking it.
This speaks to the opportunity of tokenizing GPU clusters, I think.
That's right.
That's insane, and a large raise, because it's bigger than the raise that we also saw this week, Kyle, from AgriDex, an agriculture tokenization platform. So they raised $4 million, and that's actually on top of $5 million. So a total of $9 million to date that they have raised for this platform. They're out of London, and they have, Kyle, 4.5 billion commodities that they plan to tokenize, they say, in commitments with their partners. So I think that's a pretty substantial number, if you ask me. In fact, they're planning to move, I think I saw from the article, West African cocoa beans and other kinds of wheat and other kinds of agricultures that they're planning to expand to. So all about it, right? With Pax, some commodities clearly are coming on chain. AgriDex may be one of the biggest. Last thing I want to add here before you chime in, so they also chose Solana for their tokenization. So another point that Solana is no longer just a meme coin type of chain. You see MetaWealth, you see Parcel, you see Etherfuse, now AgriDex. You got a growing RWA ecosystem on Solana, and AgriDex is looking to bring commodities to it, I guess. So very cool. Lots of great investors and angels behind it too, if you go check out the article. But Kyle, what are your thoughts on AgriDex?
Yeah, I think this is a great one. Cool to see Solana blockchain projects coming to market. I'm kind of in the same boat as you. I've never really been a huge meme coin guy. I certainly throw $50 here and there at random bets and kind of treat it like a venture or a small gambling problem, if you will. But I think that it's cool to see Solana, which has so much liquidity and has really been doing a good job of driving retail adoption, having new projects that are trying to solve real problems. You know me, I love commodities just because if there's a liquidity discount in the tokenized sector due to low liquidity, we can just redeem for the underlying and then capitalize on that. I think that's going to help drive the liquidity of this asset class. And so cool to see that they're doing that. Again, the DEX component, I'd have to look into how they're planning to do that. Decentralization and permissionlessness is difficult to do in regulated industries. So it'll be interesting to see how they kind of layer a lot of those things on top. But I think it's great to bring commodities on chain. The more that we can do that, the better, because there's so much opportunity here. And it really, I think, is a way to unlock a lot of these smaller third world nations, because they all have so many natural resources that have been untapped, that if we can start to tokenize those things and bring them into the market in competitive economies, as opposed to having like, some of these huge companies that come in and just like get super predatory pricing. I think it's best for everyone. So cool to see AgriDex working towards this.
Great use case for democratization here, for sure. Opening up these markets, I think, is extremely exciting. And just like kind of we see with real estate, commodities have this similar element where you can really wrap your head around it pretty easily, what you're buying, right? As opposed to having to be sold a complex investment strategy or, business opportunity. So it's great to see. And speaking of seeing great things, Kyle, this one I did not have on my bingo card, but I absolutely love it, and all power to them. Akemona. Kyle, we talked about them on the show in the past many times. I believe they've won our Company of the Week. They were one of the early pioneers with a crowdfunding platform that can tokenize. They offer a SaaS model, which is, again, part of this business model of fee compression around tokenization, as we've talked about many times. It's mostly a commodity in itself, the technology. But the important thing is, how much can you tokenize? And frankly, when you get to 9 figures in tokenization, it's a big deal. And they've announced 100 million TVL milestone, or I assume when they mean tokenized value lock, token value lock, that's actually assets on chain, as we discussed. But it's a big deal, right? Because people are not aware that there are many platforms like Akemona out there that are also doing a lot of tokenization. There's a ton of fragmentation in this industry. We do our best to cover on this show a lot of these, put a spotlight on a lot of these folks that are doing this kind of great work for the industry under the radar, not getting as much as the attention from the BlackRocks and the other, leaders in the space. So a huge congratulations.
Yeah, this is interesting. I'd love to see like what the TVL consists of. In the article and the announcement, they didn't really communicate that. Akemona, friends of the show, we support them, and they've certainly been grinding for a long time, as you said, in this industry. So I think that's fantastic. The question I'll have, obviously, is this 100 million in liquid TVL, or is this 100 million in market cap of companies that are fundraising? Which so I think there's a lot of funny business that we've seen in crypto of companies using really low float to project super high market caps and things like that. Not suggesting that Akemona is doing that, but again, in crypto, you just tend to be a little bit skeptical. So I'm interested to see from Akemona's perspective how this breaks down into how much they've actually fundraised through the platform, how much of that is investable assets, and how that's trending for them over time.
It's a great point. They do crowdfunding, but I'd almost be willing to bet that most of that 100 million actually comes from Reg D, or maybe even a Reg A offering.
Sure.
So they are capable of doing it all, and they say they do real estate, equity firms, companies, startups, venture funds, crypto companies. So we don't know what it might be, but it's a great question to ask, and maybe we can find out for everybody on the show here.
Yeah, for sure.
Last but not least, Kyle, some cool news from Blockchain Capital, right?
Yeah, I honestly really wanted to highlight this one. I think it's really cool. I'm a huge fan of both Blockchain Capital and Spice VC for tokenizing the shares of their LP. And Tal from Spice VC is a good friend of ours of the show and an investor in STM. And he was telling us about how he had been paying distributions and dividends on chain a few different times and had been very successful. And I was really excited to see Blockchain Capital now also doing the same thing. So as announced by BCAP just this week, they actually are paying dividends on chain. So they paid, I think, a 25% of the original purchase price. So 25% DPI of the fund on chain to token holders just this week in USDC. So they paid 25 cents per token on the $1 token price. So I think that's a really cool opportunity. I'm not sure if this is their first dividend or how they've done this in the past. I know that I think only 20% of the fund was actually tokenized. So perhaps the other 80%, they just got traditional dividends. But I think this is a huge milestone because Blockchain Capital originally issued their token as kind of an indirect economic access, meaning they were just going to buy the tokens off of the marketplace and burn them. They then reissued the token through Securitize as a security, and now it is a full-on direct economic interest receiving dividends from the fund. Blockchain Capital obviously being the most successful fund in the industry from the 2017 to 2020 vintage. They've still been very, very successful over the last 4 or 5 years. So really cool to see that they are still paying attention to their token. They didn't just issue it and never look at it again. They're still issuing the rightful dividends on chain. And I love this model. I think it's really cool. On top of that, they also are leveraging ZK Sync for their issuance. How that actually layers it in here, I have a little less clarity. If you want to do that.
I can fill that picture in. They're upgrading. They're moving off the Ethereum mainnet. So ZK Sync is helping with their scaling here, which is a testament to, I think, what we've seen in the beginning of the early days, which is everybody had to tokenize on Ethereum. You had very little choice. And that's when actually the promise of L2s or other chains came about to say, hey, we've got lower gas fees. We've got more cost-effective transaction fees, which, on Ethereum became quite prohibitive in many cases. So this is not really a surprise, but also great to see because it kind of also presumably also, forced Securitize to include ZK Sync. So any other on-chain issuers, within Securitize could also potentially leverage this new upgrade to go off of the Ethereum mainnet. So, but awesome news. We love to see funds distributing. I also love Blockchain Capital because it is truly their LP units that kind of like you can kind of get exposure to and trade. It's not just a firm that you're subscribing and redeeming. It's not just a fund that acts sort of in a primary capacity. You can actually trade BCAP, Spice VC, and some of these other cool funds. So I absolutely agree. This is just a great use case and poster child for the industry, not to mention Blockchain Capital's track record and success with their portfolio speaks volumes on its own. So again, just a great example to point to for the industry, and love to see that kind of activity. 25 cents on every dollar. Let's see it keep going.
Yeah, I don't know if you mentioned this, but I think it's kind of cool that ZK Sync is also a portfolio company of Blockchain Capital. So.
That does not shock me. But anyway, that's all we got for the market movements. We've got a great interview coming up. So why don't we dive right in and hand it over to Jason.
Welcome, everyone, to another Security Token Show interview. This week, we're spinning it up a little bit. It's not an RWA platform. It's not a new RWA issuance. This has to do with data, actually. So I'm joined today with Patrick and Jesse from SonarX. Gentlemen, how are you today?
Doing great. Thanks for having us on, Jason.
Yeah, very good. Thank you, Jason.
Absolutely, my pleasure. You guys are doing some exciting stuff on the data side of things, specifically with blockchain level data. You guys are integrating with AWS Open Data to make fully indexed blockchain data available for free to pretty much anyone that wants to tap into this. And I think that's really cool. But I want to hear about it directly from you guys. So for our audience, tell us a little bit more about this announcement here and the blockchains that you're working with.
Yeah, well, we're really thrilled about making this announcement with AWS. A little bit of background about SonarX. Today, we cover general availability, 70 plus chains, but we are working towards really quickly getting to 100 plus availability across all the on-chain data sets. So the open data set today, there was traditionally Bitcoin and Ethereum provided by AWS. And the announcement, we've added 5 new chains, which Jesse's going to go into in a little bit. But this is very exciting to us because AWS is making more deeper investments and looking into building out more products within Web3. And that's a big signal for us in terms of where enterprise market and institutional market is. And SonarX, from the foundational structure of our background of the team and where we are in our stack and our vision, was always institutional first, as opposed to native first. And so all our data, even though there's very widely varying chains across the 70 networks that we provide, we try to, and we have a standardized lens of bringing it into a digital assets perspective, whether it's asset managers, ETF providers, auditors, any type of institutional you're thinking about. And so how do we make really complicated blockchain data very simple to use and also able to scale? And reason I bring that up is this is really great because now AWS and us together, we're partnering to bring that for free to any user. And why is that so great about having that in open data? Now it means that institutions, enterprises, and developers can tap into that data already in that structured format. And number two, it comes with our proprietary data quality framework. Our data quality framework is very important that people who know or have dealt with on-chain data, because on-chain data tends to be very messy because the blockchain is a consensus mechanism of multiple servers and networks, and the data that's posted or pulled from those payloads, like when you actually retrieve data, it can come out in bad or messy form. And so we have this very robust system that analyzes, fixes, and cleanses it, and that data is, and that framework is already part of the open data. So you're getting that high level of data quality in the open data as well, with that curation of digital assets. And it also means that it's completely free. We're talking lots of data in the terabytes. I mean, in background, we have about 0.5 petabytes of data in our commercial product. On AWS, we're talking multi-terabytes. That's a lot of data. No egress. Any developer can pull on that data. It's already partitioned in Parquet. If you're a developer, you deal with these kind of file formats. So it's ready to query. You can run analysis, analytics, develop, AI ML ready. So really thrilled that it's opening it up to the market and via AWS and us.
Yeah, and I would just add to that. I think one of the misunderstandings that we're seeing from our seat in this space is because everybody knows of blockchains and for the most part, they're public distributed ledgers, it implies that, hey, that's great. I can just plug in, get the data, understand all the activity and the full history of a blockchain network. And while theoretically and technically that is true, what people find out pretty quickly is you can't just spin up a node and start working on the data, right? There's a lot of data infrastructure. And because some of the reasons Patrick was mentioning, an immense amount of data, the data is coming at you rapidly. These blockchains, as we all know, don't sleep. It's one of the benefits of them. There's data quality issues, as Patrick alluded to. And now, if you think about where we are in this point in time, there's hundreds, if not thousands of blockchains out there, right? And more are becoming relevant and people need to understand them. So you're now magnifying or multiplying this problem by the number of blockchains that you care about. And that's really where we are focused and where we are seeing a lot of demand.
Yeah, no, that makes sense to me. I mean, we're data aggregators as well. And something that we see is oftentimes, we get different types of data from different, broker dealers that we work with and marketplaces around the world, which give us data in different formats, different time intervals. And so I can only imagine what you guys are going through with indexing different blockchains from Genesis to today, basically, and all the intricacies that goes into that. That said, 70 plus blockchains that you guys integrated with and always adding more, I'm sure. But you guys did start with a few on the AWS one specifically, as they relate to RWAs. So tell us a little bit more about those, inaugural 5 chains that you guys are working with here.
Yeah, absolutely. So we worked with the chains as well. So it was kind of a collaboration between us, AWS, and the chains. And the chains were Provenance, Arbitrum, Aptos, Base, and Ripple. Right, great. So you're pulling up the logo. And I think from our perspective, we were really excited about this selection of chains because it really hits a lot of the different use cases around blockchain technology. When you think about Ripple, obviously payments, Provenance, which I'm sure your audience is familiar with, but obviously very, very focused on RWAs. Aptos, Arbitrum, very focused on scaling. And then, of course, Base is a little bit more like, let's say, consumer user focused. But we really like this mix of blockchains because of all the different use cases throughout blockchain that we're seeing. And, just to go back to AWS, so they started, they had done themselves Ethereum and Bitcoin. And I think a really interesting and cool signal for the industry is their interest in really expanding this, right? So they started with 2, now we're at 5, and, we're very excited, hopefully to be able to, add a lot more in the coming months.
Very, very cool. What kinds of use cases have you guys seen in terms of your past and current clientele as it relates to either RWAs or what kind of interest do people have in blockchain level data and maybe like specific parts of it that you guys have seen maybe more commonly queried than others, let's say?
Yeah, I can start with that one. So examining like a one that we can kind of all relate to. So real world asset, short for RWA. Is the securitization or tokenization of an instrument or an asset. And we're seeing a lot of that on permission chains. And now we're talking about provenance, which has a mission to do that. And one of the interesting facts today is that they deal with a lot of the mortgage side on HELOCs, so the home equity line of credit. So there's about, my understanding from the last one talking to the executive team there is that 20% of HELOCs are now issued on the provenance blockchain. That's incredible. So you can start having to take a look in that type of data. So the structure in which that data is, the user, the adoption, the volume, the movement. There's a lot of on-chain characteristics that are very interesting to all the players in this space. And outside of even just RWA, and it's very parallel to sort of the RWA concept of financial institutions, is really the ETF providers. You think about today now, a lot more funds coming out on ETFs, and they're getting more and more outside of just Bitcoin and Ethereum. So what does that mean to have a top 20 or a top 50 fund? What is the inclusion of that? What are the requirements for fundamental analysis? And of course, there's market data around price action, market cap, volume from centralized exchanges, but there's this whole component of on-chain data that's absolutely vital. It shows the characteristics of those chains and networks and the adoption of that ecosystem. So what are those users? What's happening in those protocols or the protocols that live within them? How are they thriving? Are they moving in an environment that's moving up or down? The interoperability of those chains. So that becomes also a very interesting facet for the ETF providers and asset managers and generally the FSI industry segment.
Yeah, and I would just add a couple of things to that. So one, a couple of areas. So the financial institutions, particularly the asset managers, as they're building products, they're trying to think, okay, what chain should I build on? Where are the users of my competitor products? What are they doing? Who are the holders? Things like that. We're also seeing a lot of demand for the data from like auditors and, Big Four type, right? Where they need to get very high quality, detailed data about on-chain activity of their clients, right? And the more and more that RWAs are starting to proliferate on-chain, the more and more they need this high-quality data. Add in the fact, hey, we need it across many different blockchains, right? That's where we start to see a lot of success. Another area, two other areas where we see use cases is actually other data analytic players, right? So, we really are a layer before the data analytics, right? And so if you even think of a platform, like your own, you guys can be a really good user where you can take data on all these blockchains and then show charts and analytics and insights into what's happening on chain. So we really unlock and enable a lot of that. And one last, prevalent use case is what we'll call the risk analytics players. So the folks who are tracking assets, monitoring from an AML, KYC perspective, they're very, very hungry for on-chain data. And again, the more and more RWAs start to proliferate, the more and more they're going to need to be able to track this from a risk analytics perspective on-chain.
Yeah, no, totally. And we have some of those partners ourselves, when what you have, on the one hand, you have Moody's, which, is very traditional on the rating side, but they've started, rating different tokenized securities and funds and assets. And then you have the others like Credora in particular that also start diving a little bit more particularly into the blockchain level data and security and so forth of the asset, not to mention the underlying asset itself. So, for those reasons, I totally see what you guys are saying there on the analytics side. As well as for us, so all really interesting stuff. And for people that like that kind of want to have access to this data, kind of want to start looking at it, how can they access it? Or is there a website for AWS Open Data? What's the best way to get in contact with you guys and so forth?
Yeah, so there's a starting portal at aws.com/web3, which is really a landing page of all types of AWS tooling and resources that they have. And there you can dive down to, and I think that's the easiest way, is open data. And then you'll see the actual total of 7 chains today that we just announced. And from there, it will give you all the ability to, and there's also write-ups on how to utilize the data and sample code of maybe some startup code that how you can pull the data from there.
Yeah, and I think another great thing about the way this is set up, and bravo to the folks at AWS, but the way they did it is they're public. They're like fully public and open via S3 buckets, which means it should really help with any internal roadblocks that even some of the enterprise and financial institutions have, right? Because obviously they're kind of going to have all their approvals for AWS, right? And so that really does help speed up the process, right? And we see this ourselves when we deal with larger financial institutions. It can take them quite a bit of time just to get ready for our trials. But now this is completely unlocked and available via AWS.
Yeah, and it's important to note as well, it means that you don't necessarily have to be an AWS customer to access that data. It's completely public. So whatever developer stack you have, you can access it because it's via S3 and there's Parquet data there.
Wow. Everyone, honestly, if you're listening at this, or if you know someone that this could be useful, to, who doesn't like free data, guys, it's as good as it gets. So no, definitely go check it out. I know I will be for sure, and my team. Patrick, Jesse, I appreciate you guys coming on the show. Are there any last thoughts that you guys want to make sure our audience, hear from you guys before we hop off here?
Yeah, Jason, first of all, thanks for having us on. The only last thought is super excited for next year. It's a crazy time in the market where, yes, we're starting to see the starting of a new cycle. We'll see what happens next year. But, wherever the cycle is, we see the future of where blockchain is going. We're invested in the vision and the future of blockchain, and sitting in the seat of having all this data and seeing the momentum and the changes that have happened over even just this last year, and talking about even 3 years ago, there is so much evolving things happening right now. And I'm super excited about all the entrants and the institutions coming in the way that they are. That's really exciting. And so we're very excited about next year, and hopefully we'll be talking again more about it.
Awesome. Same here. And actually, before we hop off, one last question, actually. Anything on stable coins that you guys are seeing on that end?
Yeah, absolutely. I'm happy you brought it up. I mean, look, because we're sitting on all this data, and the fact that most stable coins and yield-bearing stable coins or yield coins, they're being built and designed to be on pretty much any blockchain because it matters where the activity is and where the liquidity is, right? And so, some of the rumblings in the market, right? Like, for instance, it's not a coincidence that the cloud providers are kind of taking a bigger focus on the space. At the same time, you have a player like PayPal who's just invested $1 billion to buy Bridge, right? And I think from our perspective, what we're seeing, Stripe. I'm sorry, Stripe, investing in Bridge. It's not a coincidence, right? Like that. This is where payments is going, right? And we all know how big of a market that is, how big of an opportunity that is. And so, we're excited to essentially have the data that's going to unlock a lot of those use cases.
Yeah, and I knew exactly why Jesse's mind was going there, because obviously PayPal, PyUSD, service by Paxos, that's a huge indicator in stable coins as well too. So that's where the industry is going. It's really important to see that evolution of that liquidity and across multi-chain.
100%. I mean, the stable coins, obviously you have the very, one-to-one pegged and whatnot, but then there's also other ones that are not just collateralized by dollars or whatever currency it is, but also, treasuries and so forth. So at some point, it'd be cool to also be able to see all the reserves on data for all these stable coin or on-chain, which of course you guys will bring visibility to as well.
Yeah, exactly. We were just got back from the reInvent conference, AWS's flagship conference last week. And, we were part of some roundtable discussions with a lot of large players around the space. And I can say that was a pretty prevalent topic. So it's pretty exciting from our vantage point.
Well, I'm excited to see all that's to come. Jesse, Patrick, thank you both so much. I appreciate it.
Absolutely. Same to you, Jason.
Now we are time for our weekly update on the RWA Foundation, which we launched less than a month ago to bring the industry together, a crypto native community for RWA. So this week, the update for you is that you should get excited for next week. We hate to tease you like this, but we are going to be releasing our white paper. So our community on Telegram has been lit up about what this token might end up doing. You're going to be able to read all about it in our white paper next week. So make sure you follow us on Twitter. Make sure you're in our Telegram. Just maybe you'll get a sneak peek. So we definitely encourage you to join us. We're at RWA Foundation _ on X. You can also follow us on our website, RWAF.xyz, for our newsletter. And last but not least, please join in our Telegram. That's where all the action's at. We're talking about bringing together everybody in the industry to help support and bridge RWAs to DeFi. That's what the RWA Foundation is all about. So come tap in, and we'll catch you next week. Let's move on to Companies of the Week. All right, Kyle, what a great episode this week. We are diving right into our final segment.
Our final segment, Herwig, it is the most important part of the day because we are only, 2 weeks away at this point?
Might only be, one more episode maybe.
Registrations are closing, people. This is a pretty big deal because our Company of the Year award is so important to the industry because we like to focus on who made the largest, most outstanding and outsized impact on our industry. Herwig and I, we don't even know. We have no idea what the committee's deciding. This is totally a broader industry decision. There is a committee that Herwig and I just happen to be a part of, but the only way you can be nominated for the Company of the Year award is to win the Companies of the Week award, which is what Herwig and I pick once each week for each one of us. We get to choose a winner of the award for who made the biggest moves this week, Herwig, and I'd love for you to announce who is your winner of Company of the Week.
Company of the Year is less than a month away. That's insane. We've made it through another year, folks, almost. We'll see if we've got it in us to give you 2 more chances to qualify industry. But usually we only do 1 more episode for the year after this. So there may only be 1 more shot if you did not win this week. So make sure you shove out all your announcements next week so we can have a great final decision. But Kyle, I got to give my Company of the Week to a recurring winner and winner of Company of the Year, but I got to give it to Securitize. I think the Michael Sonnenschein acquisition, the hire, if you will, is absolutely enormous for the COO role. This is, as broad as it gets when it comes to Securitize's operations. So I see an incredible combo out of Carlos and Michael. I believe he's over in New York, which is another great, location for him to be in. Given that we're seeing this huge wave of TradFi onboarding to RWAs, to tokenization, many of them choosing Securitize as their platform. So I think this is a fantastic sort of hire, right in the mix of, you've got that crypto expertise, that tokenization background that you'll be able to understand, but also, of course, the mechanics of raising capital, of TradFi, of capital markets in general. So, to me, that's a very rare combination. Usually you have to hire somebody from one extreme. And Michael represents that rare breed of capable operators. So, for me, Kyle, I have to say that personally, we often, and this is not a surprise, but we're often disappointed by a lot of the talent that sometimes joins the industry because they don't have this background, this foundation. So to see the quality of people joining the industry just speaks to where we are as a sector, right? That now people who have huge opportunities within crypto or huge opportunities within TradFi are saying, no, there are huge opportunities in tokenization. That's where I'm headed. So congratulations, Securitize, on this new hire. Congratulations, Michael. Welcome to the RWA game.
That is a great winner. I think it makes a ton of sense to give them the lead. We talked about that at the top of the show, and it's, I think, going to be hopefully a game changer for Securitize, provided that Michael really comes in to lead the way. Herwig, my winner this week, though, is another great company that we've been working with in the tokenized industry for quite some time. You ready for mine?
Tell me, who is it?
It is friend of the show, Ravi Srivastava, and his team at Akemona. Akemona Technologies is a broker-dealer based in the U.S. They've been focused on tokenization. They built everything from the ground up, and they've just been grinding. And they did just announce $100 million in total value locked across clients on their platform. Now, as we said, what does total value locked actually mean for a broker-dealer? Relatively unclear, but it does mean they have been successful in fundraising and onboarding their clients into the tokenized ecosystem. I think that is a huge thing to celebrate for the industry. Akemona is an upstart broker-dealer. They're building this stuff from scratch. They haven't had huge, fancy fundraising announcements from crazy big investors. No, they have just had grit and determination and have continued to build their client base and have stayed consistent in a market that has been difficult, as we've seen, to monetize for a lot of these broker-dealers. And Akemona just keeps on plugging. And for that reason, I wanted to give them the shout out for working really hard and for just staying in the game.
It's a great choice, Kyle. They absolutely have the grit, determination. I remember speaking to them way back when they first got started, and now they're at 100 million. That's only 10x away from $1 billion. And when you're at $1 billion in tokenized equities, you're one of the biggest ones out there in the game. So, they're starting to make moves, and I'm excited to see them make this milestone announcement, because once again, it also speaks to where the industry is at. These companies that maybe we're given a second look 3-4 years ago, now they're saying, hey, we've made it through. We've pushed through it. We're getting clients. We're tokenizing, hundreds of millions plus in tokenization. So there's no doubt they won't stop there. So congratulations, Akemona.
Absolutely right. So those are our Company of the Week winners, Herwig. We are running out of time. So if you want to be nominated for Company of the Year, you better make sure you get your big PR out this upcoming week, and make sure you send it to Herwig or myself. You can do that on LinkedIn. You can do that on Twitter. You certainly could tag the Security Token Market accounts or the Real World Asset Foundation accounts. We'll be paying attention. We want to cover your news. Just do what you can to make it easier on us, because Herwig, you and Jason and the rest of the STM team deserves a huge round of applause, especially this year, for carrying the show's research, for working your butts off and finding everything in the industry, staying up to date on everything going on. It is a thankless job sometimes in this industry to make it all happen. And so if you want to be covered on the show, don't get offended if we don't find you. Make sure you're easy to find. Send it to us. Make our jobs just that much easier, and we'll make sure to give you the coverage that you deserve.
You are absolutely spot on, Kyle. And for those of you who are just watching and enjoying the show, make sure you check out stm.co for all your latest trading information, all the latest RWA news that you can find. We've got great monthly research that you can check out. We got a cool report that we'll be releasing very soon around real estate. So get excited for that. We've also got summit.stm.co, where you can go check out Tokenize This, which will be happening in April in New York next year. Better be there, because it's going to be the best summit in the industry. Can't wait for it. But with that, Kyle, that's our show. Hope to see everyone again next week, and happy tokenizing.